Welcome back to the channel, everyone. I am Skylar James, and today we're going to be talking about investing your very first $1,000. We all know investing is hard, but saving can be even harder. Yet, here you are. Whether through blood and sweat or just stimulus from Uncle Sam, you have your first $1,000 ready to invest. Congratulations. Now, let's make sure to protect and then to grow that money. If I were to go back to my first $1,000, here's how I would invest it today. For new investors, the challenge is striking the right tone, the right balance of risk and reward, protecting against the loss of your hard-earned money while also having a reasonable chance at appreciating it. I'm sure many of you have seen on Reddit or YouTube about the guy who YOLO'd on GameStop or some obscure out-of-the-money option and then made bank. But don't fall into that trap. It's no different than the 1 in 300 million lottery ticket winner. You are better than that random YOLO. Warren Buffett, the Oracle of Omaha, one of the greatest investors ever, preaches owning indexes that contain a small slice of hundreds of stocks. Don't read headlines, he says. Never do any accounting. Rather, just bet on America. American companies, American stocks. That's Buffett's advice on how not to lose your shirt in the stock market. And he's the most successful to ever do it. With these indices, I could bank on the success of businesses as a whole rather than riding and dying with one particular entity. These indices are called exchange traded funds, or ETFs. I purchase one share of these ETFs. In effect, I am purchasing a tiny slice of many hundreds or even thousands of different stocks. ETFs are traded on exchanges just like stocks, and their value goes up and down each day like the stocks inside as they move up and down. I want to show you what I think are the 3 best ETFs for my first $1,000. All of the ETFs I'm considering are issued by Vanguard. I like Vanguard because they charge me very little in fees compared to almost any other ETF issuer. And they specialize in broad, diverse ETFs, ones that contain many holdings. The first ETF worth looking at is the Vanguard S&P 500 ETF. Ticker is VOO. Its purpose is to mimic the performance of the S&P 500 index, which gives me exposure to the 500 largest American companies. This is Warren Buffett's preferred investment approach for average people to stay on course through to retirement. The stocks within the biggest allocation of VOO are household names. An investment here is an investment in Apple, it's an investment in Tesla, it's an investment in Amazon. 28% of each VOO share I buy is allocated to these 10 companies. Names that you know, names that you've heard of. About 490 some other companies make up the rest of the holdings. These are also household names like MasterCard and Boeing, for example. An investment in VOO back in 2010 would have more than tripled by 2021. Had I patiently held through the downs and ups, that's a gain of over 13% each year, stretching out the value of my very first $1,000 just by betting on America, as Buffett suggests. The second ETF I would consider for my first 1,000 is the Vanguard Total Stock Market ETF, ticker VTI. Just like the S&P 500 ETF, the Total Stock Market ETF holds the 500 largest American companies, but in addition, it also holds companies that aren't the 500 largest, called mid-cap and small-cap companies. These mid and small caps make it so that buying one share of VTI is like buying a tiny slice of a whopping 3,669 companies. That's the level of diversity I want to see for my first 1,000. Protect money and grow money. The extra 3,200 stocks in VTI leaves me with a smaller allocation of each of the top 10 holdings compared to VOO. And while both of these ETFs have performed very well, 13% annually is nothing to scoff at, the extra holdings in VTI have generated a slim 0.06% outperformance annually over the last decade. Plus, you do get all that extra diversity. The investment thesis behind VTI is the same as VOO. Owning the whole American stock market, either companies of all sizes or just the 500 largest, is a very smart bet on America. Just buy and hold forever. No accounting work, no watching the headlines, no trading in and out of stocks. Just buy, hold, and collect the reward. The third and final ETF is a different style than the first two. It's the Vanguard Total World Stock ETF. Ticker is VT. This behemoth of an index gives me exposure to 9,000 stocks from all corners of the globe. The other two ETFs we talked about, VTI and VOO, only include American companies. This one includes large stocks from all around the world. As we look at the top 10 holdings of VT, notice Tencent, a Chinese company, and Taiwan Semiconductor from, surprise, surprise, Taiwan, pushing their way into our portfolio. The percentage held by the top 10 of VT is crunched down to make room for almost 9,000 holdings to fit. It still contains the 500 and the 3,600 companies that VOO and VTI hold, respectively, plus you get the diversification of other regions. VT is global exposure to almost every public stock market. While the returns annually haven't been as strong as the American-only ETFs of VOO and VTI, the broader diversification protects my $1,000 from a potential American-only meltdown. Perhaps the strongest argument for VT is the chance to participate in global economic rallies rather than just American ones. For instance, oil companies from the Middle East, African e-commerce sites, Chinese internet giants, and South American mobile payment apps. Whichever of these ETFs I end up choosing, VOO, VTI, or VT, the investment thesis is the same. Broad diversification without trading in and out is an effective first investment of my hard-earned $1,000. These ETFs offer proven performance without betting on any one company, CEO, or industry. Owning any one of these three is a smart, proven investment strategy. And hey, don't stop at your first 1,000. Stay tuned for the first $10,000 video coming soon, and you can start saving now.